Hey guys, welcome back to my channel, and today we're going to be doing another breakdown of a market maker model. In this case, it's a market maker buy model from yesterday, which was Thursday, and it's going to be using a 4-hour power of 3 movement and in alignment with a 15-minute market maker model. So without any further ado, let's get right into this trade breakdown. And if you like these trade breakdowns, let me know in the comments and let me know what you want to see on this channel in addition to kind of trade breakdowns. Okay, so first thing let's do is discuss our market maker model schematic, kind of our framework for how we approach trades. So as you can see here, this is taken directly from my Twitter. This is the general structure I'm looking for in any time frame market maker model. Of course, moving from our higher time frames down to our intermediate and lower time frames, where our higher time frames are going to frame areas of smart money reversal. Our intermediate time frames are going to frame a structural market maker, and then our lower time frames are going to allow us for entries and low-hanging fruit, which themselves are going to be lower time frame market maker models. As you all know, these things are fractal. All of price action contains, different fractal moves, which we can take advantage of. So let's get right into our higher time frame and talk about what we saw yesterday. So on the 4-hour, as you can see, we're discussing and we're examining a move between internal range liquidity and external range liquidity, right? This is the oscillation between a fair value gap and an external range high or liquidity. As you can see, we have this 4-hour inefficiency on NASDAQ, which is a buy side imbalance, sell side inefficiency, and we have this external range high, which also contains several failure swings or low resistance liquidity below it. Now, in addition to that, what we have to also consider is our bias for the day. So a couple of my students today asked me, how did you know price was going to move higher, or how did you anticipate longs in the market as opposed to, maybe targeting reversals for a short thesis after we swept this 4-hour high the previous day? So for that, I came up with this explanation, and I think it's really valuable to share here as well in this YouTube video. So let's examine what a break of structure versus a market structure shift is. And this is really going to help us understand when to expect structural continuations versus reversals. And this is going to be utilizing our price action signatures. So a break of structure can be defined and characterized by candle body closures, displacement, and respecting the PD arrays that we create along that displacement leg through the liquidity. Also, it's generally advisable to see a higher time frame draw on liquidity when determining if something is a break of structure. Now, in this case, as you can see on the 4-hour chart, we're at all-time highs on NASDAQ, so a higher time frame draw might not necessarily be as easy to kind of interpolate from looking at the graph or looking at the chart. But we do know that ES is still moving bullishly towards its all-time highs and respecting bullish structure, so we can expect for the short term a sympathetic move in the NASDAQ, in addition to the fact that we're getting the rest of these, confluences confirmed, right? We're getting displacement through this 4-hour high, which is giving us a market structure shift, creating an imbalance, and then heavily respecting that area of price. If you look to the left here, which I don't have on this slide, maybe I can post a picture after, we have a breaker here on the 4-hour, which is the last up close candle before we broke down lower, that is also being respected inside this 4-hour gap. So as we can see, we have a lot of confluences here for higher prices, and we're not trying to time the top or the bottom of the market. We're not catching these. Instead, we're playing pro-trend moves in alignment with internal range to external range and then external range to internal range, right? We want to be moving with trend, which is why we use a higher time frame kind of guidance for our market maker models. Okay, now let's compare that with a market structure shift, which is going to lead to, a sweep of liquidity and a reversal. So as you can see in these cases with market structure shifts, we're wicking the liquidity. So we're not seeing these candle body closures above, previous highs. In addition to that, we're definitely not seeing, fair value gaps be respected as we're breaking structure. In fact, we'll often see something called sharp turns, where we have a candle close aggressively through the liquidity and then back down with another candle that violates that PD array or fair value gap that was created on that bullish or bearish, move up or down into the liquidity. This is a really strong indicator that that was a liquidity sweep or a wick on a higher time frame versus, a break of structure and a continuation higher. Now, this can also be seen with early market structure shifts, right? This is defined as inversion fair value gaps. And like I said, displacement out of the liquidity pool, which would be right here, this 4-hour liquidity pool, which we actually broke above, signifying, now we're in bullish market structure, which is in this market structure shift. Finally, the draw on liquidity is usually met at that area of reversal. So in this case, this 4-hour liquidity pool high that you might have been framing a reversal around is not the anticipated higher time frame draw, as we're respecting, bullish PD arrays and we're continuing to move higher. Therefore, we don't try and time the top of the market. We simply allow ourselves to play within the pro structure move and the pro confluence move, which is going to be internal to external in this case, once we see lower time frame confirmation, obviously, of this bullish reaction. So if that makes sense, we can now move into the 15-minute chart where we can really frame our market maker buy model and our entries. Now, of course, we can also go down a time frame to the 1 minute to refine these entries. However, on a day like today, I actually didn't do this. I just simply used a 15-minute entry and was okay with, sitting through the drawdown of perhaps a less optimal entry because I trusted the narrative and the draw on liquidity. So let's take a look at this chart here. And the reason why I named this trade make smooth edges jagged is because we have this external range liquidity, and as you can see during the Asian and London session, we create this LR signature, which is low resistance liquidity run signatures. Essentially, we have failure swings. Now, these failure swings resting below the external range liquidity give me good indication that once we protract or manipulate into the New York Open, known as late London protraction, which I have a video on my YouTube on, we can now expect to see bullish structure and aggressive expansion towards our buy side target that's been manipulated away from. So now here's where we can start to combine market maker models and standard deviation theory. As you can see, the projected deviation of this London manipulation right here, this last set of up close candles or order block before we break down, we see that in the 1 to 1.5 region, it's our silver bullet reaccumulation zone. A 15-minute gap in here is utilized for that, right in there. And then our low of the day is put in at the 2 to 2.5, right at that 2.5 level, signifying the low of the manipulation. Now, this is paired again with our market maker model understanding of a higher time frame PD array acting as, the origin for a smart money reversal, which is our 4-hour buy side imbalance, sell side inefficiency, or fair value gap. As you can see, once we put in this low, we break structure on the 15-minute, creating our low risk entry, which is an order block and a fair value gap, a small one, and then the entry which I took, which is the secondary confirmation or the first phase reaccumulation at this propulsion block. Now, T-Trades has a video on his YouTube, he just posted today on propulsion blocks. Fantastic, I would definitely recommend checking it out. And that's the entry I used right here to take us to buy-side liquidity and this 2 to 2.5 deviation. Now, this move in here is, again, about a 3R trade if you could catch the bottom somewhere in here like I did and then hold to just beyond this 2 standard deviation level. And the other confluence we had with this entry was not only our manipulation in London, also using the economic calendar, of course, to align our trading days. A high impact news day is likely to give a volatile expansion towards our draw. But we also see we have 2 other confluences. That being 1, a seek and destroy profile, and 2, an SMT divergence. So let's touch on what both of those mean. A seek and destroy profile is when the London price action sweeps both the Asian highs and lows. It broadens the range of the Asian range. We can then expect that New York will do the same thing, sweeping both the London highs and the London lows, again broadening the range of the day. This is called a broadening formation or a seek and destroy type day. This confluence, in addition to our market maker smart money reversal, is also paired with an SMT with the ES. And as you guys know, as I've said multiple times, SMTs form and they show insight into SMRs, right? Without an SMT, the SMR is less likely. So this SMT that happens right down here, as you can see with ES and NASDAQ, gives us a good, insight into higher prices being expected in this power of 3 move, where we accumulate, we manipulate, and then we distribute. So that's essentially how I frame the 15-minute market maker model. As you can see, the precision of some of these things are definitely algorithmic. And, once you kind of can put together these concepts and these confluences, aligning the economic calendar, standard deviation theory, and of course, our market maker models, you can really get precise with your targeting and your entries. Okay, and as always, I want to be able to be a transparent, YouTuber and Twitter trader. So I'm going to show some of the Discord commentary of how I got long, right in the morning at that propulsion block area, and then how I was targeting that second standard deviation. In the future, I'm going to execute or show my executions on NinjaTrader. Right now, I have them turned off, like the little arrows, so I tried to mimic that right here. But for my next trade, I'll keep them on, and I'll post that as well so you guys can see exactly where I'm getting in and out of trades. And, just add a level of transparency. In addition, I'm going to start, recording more of my trades and posting that, but this is for my Discord members. I post these, every single day, and I try and be as transparent about my wins and losses as possible. So if you appreciated that, please consider following me on socials, Twitter and Instagram. And yeah, let me know what else you want to see. I'm really excited to, start making more content on YouTube. And this channel is really, for you guys to help you guys in any way that, you see fit with these concepts, and also help me grow, my influence. So yeah, thank you very much, guys, and I'll see you in the next video.